I have to be good enough to say to myself, has this changed my entire thesis on this thing? And if it has, stop. And that's hard. Things aren't always black and white, and there are fewer no-brainers than you'd want. And I think that if something isn't a no-brainer, then you have to start thinking in terms of probability. So Tesseract is a regulated institutional yield generation platform. And our mission is quite simply to help as many people as we can to maximize the value of their investments in digital assets. Another thing that I've learned from trading is that you need to have strong opinions, but you need to hold them quite loosely.
How would you go into an environment which is already have a set of ways of working and then try to change it to a way, the right culture you talked about?
Do the activities that before I was having to say, hey guys, like you do this thing, you do that. Now they're doing it off their own bat because they understand the value of that process, the feedback loop. Like it's very much like a missile, right? The missile hits the target because it's constantly course correcting.
What's the challenge for you to, as a CEO, to convince to a board or, the founder, whatnot?
I think that you see firms holding on too long too much, hoping that, things will go better. And I don't think hope's a good strategy. And the day I can't default to my values is the day I can no longer continue in anything. And it's the time to move on.
What sort of values do you have?
Under pressure, I default to my values. And ultimately that might mean that I'm not going to be the most aggressive person in the world, but I'll always be able to live with myself. In the past, I've been a little bit more quite chaotic, and certainly the founder at CC Data helped me a lot. And I think that I am just a function of the leaders that I've worked with, the lessons that I've learned, and I expect people to do two things. It's like one, work hard, and two, try to improve every day.
Hey James, great to be here with you today. I mean, we've known each other for many years now, right? I still have that picture we took together.
Feels like decades ago.
Well, I know, right? Market moves fast. There's so many things happen, so which is crazy. But yeah, lovely to be here with you today. Do this like official in a way, right? There's a lot of things to get through. Like I want to talk about your journey, which I think is one of the most fascinating journeys in crypto. I want to talk about your journey. I want to talk about what's happening in our market right now. Vaults, seems to be everybody's talking about it. MiCA, etc. There's a lot of things to get through. So hopefully we can address all of that.
Yeah.
But yeah, lovely to be here with you. Thank you so much for being in the podcast.
Sam, it's an absolute pleasure to be here. I'm really looking forward to this. So hopefully we can have a fun conversation.
Yeah. And one thing, right? I was in Dubai last night. We had this C-suite gathering. And I said to a couple of people that I'm going to do a podcast with James. And it seems everyone knows James.
I don't know about that.
And the best thing come out of everyone's is that, oh, what a great guy, right? So I want to start this with slightly differently is, I want to know, like, who's James and what is it that really helped you to have this great credibility, right?
I think it's very kind to tell me that story. I think the crypto markets they started out really quite small. And I joined, I felt late at the time, but I started really in 2016, 2017. And there weren't a ton of people operating in that what I would call, proto-regulated place. And those that were in it kind of all knew each other. And so presumably some of the people you were speaking to are people that have been around quite a long time as well. And so also when you look at crypto markets, they sort out, let's say, incomplete operators pretty quickly, insofar as when crypto has these massive downturns, then a lot of the firms that operate under, let's say, operational gray area, they tend to get found out. And so you get this also sorting mechanism. So by definition, the people that are sort of around still are the people that have played with a straight bat, have done things correctly, and are operating in the right way. So I think that's a function. It's a function of that. More than happy to get into sort of my background if that's of interest at this point. I think from my perspective, I look at my career really in two distinct chapters. The first chapter was first 15 years or so. I started out at Salomon Brothers, which became Citigroup, and I was a trader. I traded for banks, I traded for funds, I ran my own funds for about 15, 16 years. And I was really lucky actually because I didn't just focus on one asset class. I've spent time with equities, I spent time with bonds, derivatives, futures, everything. And that gave me a really good understanding of market structure in general and how assets work, because it's not just looking at one thing. And specifically my experience in emerging market equities sort of was quite useful going forward into crypto, because the way that emerging market equities sort of grew, like it was Asian markets that I was trading, very similar to the way I think crypto markets grew, like insofar as extremely volatile and it's an emerging asset class. So I was very lucky with that sort of formation of understanding how macro worked, generally speaking, across all the asset classes. And then it was a job that I had in 2016. I was COO for a deliverable FX broker that actually pulled everything together. So the FX payment space was not a place that I'd seen before. And working for this broker, and this broker basically spent all of its effort trying to do FX transactions for corporates and then transmit the resulting FX translations globally. And that was still hideously complex process, full of middleman, banking fiefdoms and that kind of stuff. And that's where crypto clicked for me. So this is in 2016. I suddenly realized, hold on a minute, there's parts of this ecosystem, financial ecosystem, that's just not right. And the promise of crypto was clear. Like, I was already falling in love with Bitcoin at the time, but Ethereum had just had its ICO. And it was very clear to me that sort of distributed computers and smart contracts were the way forward. Programmable money and cheap remittance becomes possible. So that's where I thought, okay, I've got to do something in this. Unfortunately, I couldn't do it at the place I was working because they didn't want to threaten their banking licenses, which I completely understand. So with my sort of fund background, I said, let's launch a fund. So we launched a regulated fund in 2016, 2017 to hold digital assets, basically. But the problem was, at the time, the custody platforms, they weren't really robust enough. So there were a couple starting out. So Copper just started out, Fireblocks just started out. Some of the more mainstream names today didn't exist yet. And so we thought that was actually the right niche to do. So we pivoted pretty quickly. Then the 2019 downturn happened, and the right decision was to effectively sell to a larger entity, which we did. So we got acquired, which was fantastic. I decided to leave at that point, and then, as you know, when we met 4 years ago, I was busy scaling out a company called CC Data, which is a sort of OG market data company that recently got acquired by CoinDesk, which is fantastic. And I was really happy to play a good part in that exit. So that was good. I then returned to the custody layer again. So I spent 18 months at Zodia Custody, which is a firm that was owned in part by Standard Chartered and several other banks. But really, I felt that I needed to be closer to the actual markets. Markets really I'm passionate about, and the opportunity to front Tesseract as its CEO and be closer to the markets and go live more on the bleeding edge of development in DeFi and crypto was really where I wanted to be. And so the opportunity came up, and I think that the founder and the board, and I just felt I had to do it as right place, right time. So really excited to be at Tesseract, and that's sort of my background.
Fantastic. And obviously being from trading to entrepreneurship to selling a company to working for somewhere like Zodia, which is a part of a big organization, now into more of a, how would I say this, growing but challenging kind of a space.
Sure.
Given the market situation as well. If you could help us understand a bit more about, here's the thing, right? So maybe a year ago, when I say to somebody, Tesseract investment, I work with them or whatnot, I would say, I go to a lot of conferences. Many people wouldn't really knew who Tesseract was. But I can tell you now because, Consensus, for example, I said, Tesseract investment. Actually, many people seems to get to know Tesseract. But I'm pretty sure there are a lot of people who don't know Tesseract right now. So it would be great to understand a bit more what you guys are doing. What's your role as a CEO? That kind of a thing.
Yeah, so I'll answer that as sequentially as I can.
Yeah.
So Tesseract is a regulated institutional yield generation platform, and our mission is quite simply to help as many people as we can to maximize the value of their investments in digital assets, and we do that by offering them safe, dependable yield. And that's the general idea. And the reason I say digital assets and not things like cryptocurrencies is because I think that as tokenization takes hold, Tesseract will also expand into other assets, and of course that's a function of regulatory licenses. We can get into that, but I think that that's what Tesseract does, and that's what the mission is. We, as the business stands today, we do two things. So clients can onboard with us direct, and we can earn yield for them, and that looks very much like an asset management type business. The other way that we provide yield is that we provide yield as a service. So there are platforms like Robinhood, who recently acquired Bitstamp, who we've worked with for many years. We provide them with their Earn platform, and so everything that you see in their Earn products is basically powered by Tesseract. So those are the two ways currently that people can achieve yield with us, directly and indirectly. And we earn our yield, and this is interesting to just double click on, but we earn our yield in two ways as well. Everything seems to be two. But the first way is that, and this is the largest part of our business, but we take the assets that we receive either via deposits or via the Earn partners, and we put them to work in our lending program. So we effectively lend them out to AAA rated borrowers, and our yield therefore is a function of credit and counterparty risk. Now we've been doing it for quite some time, and we have 20, 25, 30 names that we lend with that are tier one market makers. You probably know all the types. Can't drop names here, but that's the first way that we earn yield. The second way that we earn yield is via what we call managed DeFi. So that's again like an asset management service, and we take the assets that are deposited and we deploy them across a range of managed DeFi protocols, so things like Aave and stuff like that. And really then the yield that's available in DeFi is a function of protocol risk and leverage risk to a degree. So two types of yield, two different types of risk, two different rails, if you like. And it's that managed DeFi business that I'm most excited about. It's definitely the smallest part of our business at the moment. However, it is also the part that we have the full regulatory cover for. So we're MiCA regulated. We got that in September last year, which is very exciting for us.
Yeah, well done to you.
No, I mean, credit to the team. They did a fantastic job, but it's, as I'll get into later, it's getting the licenses not even half the battle. It's right. Less. It's maintaining that license that is hard. But we can get into that. So I think that's an important angle for us, and we'll be building into that regulated business. You mentioned the V word earlier. We can talk about that as well. Right. But that's roughly Tesseract, where we are today, and what we do.
That's really interesting what you talk about Tesseract. Can you talk to me a bit more about your role? How it started and how it's evolving as you go along on this journey? Yeah,
I mean, this role has been the biggest learning curve that I've had so far in my career. And I've probably said that about the previous role, but this one, to me, has been a real step up. Because it's a fully regulated business, taking control and dealing with internal and external stakeholders in a very challenging market. So it's really been an eye-opener from that perspective. But really, the way I see my role as a CEO, I think it's multifaceted. And ultimately, I'll roll up my sleeves and do anything. Like I'll make the tea and coffee if that moves the needle. But really, when I look at in terms of my responsibility, I clearly set the overall strategy for the company. So if we move into new verticals, then that's definitely something that I decide. I also own the product strategy at the moment. So understanding product back to front is important, and that's something actually I started to pick up at Zodia, and I'm very grateful for the lessons I learned there. I'm clearly responsible for sales and marketing. At the end of the day, performance and output revenues is what matters, and every month in my board meetings I'm talking about that and how we're doing there. So that is clearly front and central. Now I'm previously quite a commercial person, and so that comes fairly naturally to me, but still, it's one of the hardest things a company does, right? Scaling revenues. I'm responsible for people, getting the team dynamics right and getting the right people on board, especially where we have precious resources. Like we're not one of those companies that can have dream up a role and position and say, great, I'm gonna get the best person in that position. Like we have to really get our heads down and do the jobs, and many people in the firm are wearing multiple hats, which is a big stress on them, but also on the org. So I'm responsible for the people. And then, of course, I mentioned the stakeholders. So we have the board to deal with, I have our internal stakeholders, I have our key clients, partners. I've got everyone that I'm trying to persuade to come and work with us, both as employees, but as partners, and clients. Of course, they want to hear from me. They want to see where it's going. And then finally, I think, and this is probably the most important, but I'm responsible for the culture and the culture of execution. And I think that probably is one of the biggest things that's changed at Tesseract since I came in. And it took me a while to appreciate it and get it right. But ultimately now we have a extremely relentless focus on executing. And I think that having a focus and being actually quite resource constrained is important in that. So I think that the team is beginning to understand it. And it's something that is hard to begin with, right? All of a sudden, you're relentlessly pushing things through, execute, in a culture that hasn't seen that as much before. I think that's a culture shift. And how do you do that whilst maintaining relationships and whilst maintaining it to be a fun place to work? And so, in my book, I tell the team this all the time. It's like I expect people to do two things. It's like, one, work hard, and two, try to improve every day. And if you do those two things in my book, you're going to be okay. And that's the exact sort of foundation that I base myself on. Like I push myself as hard as I can, and I'm completely aware that I have blind spots, I have gaps, and I try to be the best I can every day and learn. So I think that's how I see my role and the kind of culture that I try to instill. And it takes time, but it's beginning to resonate with the team. And I think that the more you start getting into that, and then the more you start seeing results, it kind of becomes infectious, and the momentum starts to snowball. And that's when you can feel like things are heading the right way.
Yeah. So Tesseract has been around for some time. They're not like a seed phase or whatnot. So you have a certain established ways of working perhaps, but then you come in as a CEO, presumably to get the revenue up, more customers, great product lines, etc. But how would you go into an environment which is already have a set of ways of working and then try to change it to a way, the right culture you talked about, to get the best out of it? Presumably you have to, have hard conversations or whatnot, really keen to understand that side.
So I'll tell you how I did it, and then I'll tell you why part of that was wrong, and then we can go from there. So my intention coming in was there were lots of things that Tesseract did that I needed to understand more deeply. Then I perceived the culture to be a certain way, and I perceived morale to be a certain way, and I decided that I wanted to invest some time with the existing team without sort of coming out with a knife and changing things. And so it took me probably longer than I'd care to admit to have that sort of initial evaluation phase. And that might be a little bit of the downside of the work hard, get 1% better side of me, because I believe that everyone can be coached and everyone can be improved. And I think that I probably spent quite a lot of time with the existing team figuring out, like, how can I get the most out of them? Because it's disruptive, like letting people go and hiring people. That is your business, so you know exactly how that is. But of course, there are times when it's very clear that a person isn't the right fit. And I think over my career, I've lingered a little longer in situations like that. So then, how do you get the right balance? How do you think about, okay, I need the right team. How do I start instilling this culture of like, hey, I want people to work hard and try, and improvement is part of the curve. And yet, how do we then filter out the people that don't fit within that? And I think that the first thing that you have to understand is, like, is the person genuinely committed to growth, and are they genuinely committed to the direction that we're going, and do they fit the culture? And I think that's something now I'm a lot more quick to change. So, if we hire someone and it doesn't quite work out, as I'd rather make the decision early because it's fairest on both parties. And I think that once that becomes established and it becomes clear that this is a performance culture, the people start responding, and the people actually that end up not being the right fit either get selected out or select themselves out. And that's how I see it here. Now, the other thing I think you mentioned is that Tesseract has been established. So we've been going 8 years, but really the Tesseract that you see today is as a result of the rebirth in 2023. So, in 2022, it was a tough time in the markets, and firms that were exposed to some of the big platforms that went down had a tough time of things. And to a degree, Tesseract was also involved in that. We managed to survive, which was fantastic and testament to the great team that was there. And the previous CEO actually still is at Tesseract, and he's one of our top performers and works hard. So again, testament of like rebirth and people changing and adapting. So I think it has been an interesting inception. It's probably taken me longer than I'd like, but I'm happy where we are now.
Fantastic. And then let's talk a bit more about vaults, because it seems that there are number of players are building vaults. Can you help me understand like what's vaults, and then also how Tesseract well placed to perhaps is to even look at that market, and what's the opportunity for you guys?
Yeah, vaults is a space that we're extremely interested in. We've invested a lot of time and resources in figuring out how to develop vaults. Now, the first thing that we see. So what is a vault? A vault is effectively an on-chain asset management construct. So view it like a fund that exists on-chain. And that fund is effectively owned by all of the participants or the investors in that fund. And that fund or that vault you can delegate investment authority to third parties to effectively manage. And that management can be programmatic, i.e. just rules-based, or it can literally be, mirroring a portfolio that an asset manager curates, and that's why they're called curators, and apply those to vaults. So think of it as an evolution of asset management. And I'll explain vaults more clearly within the context of the pain points of our clients. Yeah. So one of the as I've explained before, we act like an asset manager at the moment, and we take custody or we take title of assets, and we then put them to work either in a centralized lending book or across DeFi in the way that I mentioned. And these assets are controlled by us. And the users receive monthly attestations, they receive monthly updates of how they're going. We'll provide sort of daily estimate returns, but ultimately it's very sort of Web 2-y, and it's very TradFi, right? And that doesn't appeal to everybody. Now, in the market last year and towards the end of the year before that, this phenomenon called vaults emerged. And vaults are really interesting because they give you real-time information as to what they're invested in, like, to the minute type stuff. So from a transparency perspective, that's a 10x better experience. It also allows you to provide more constraints if you wanted to as to what vaults will do, which is also great. So for us, it was clear that landing a vault product is probably in the long term something that is correct. But then we looked at vaults in Europe in particular, and remember, we're MiCA regulated, so we care very much about the regulatory setup here in Europe. And we realized that actually in their current shape, we couldn't deploy vaults because vaults in their current shape are a sort of mishmash of collective investment schemes, basically. So these vaults are pooled investments where multiple investors can deposit money, often with no KYC and AML. Certainly no suitability testing, things that are really important to MiCA and stuff like that. And so when we look at vaults as they are in the moment in Europe, they to us, they look compliant. So we have to think very long and hard about how to offer a solution in there. And all I can say at the moment is that we're working on something, right. And I'll be very excited to tell you more once we complete.
Yeah, makes sense. And how would you say, like, there are a lot of yield providers, right? There's always competition. It's always increase. What would you say is like the main differentiator for Tesseract in the market right now as we look forward to next 12 months ahead?
Yeah, so our big differentiator, of course, is a MiCA license. So I think I was corrected on LinkedIn a few days ago, but I think there's about 150-ish names that have got their MiCA license across Europe. That's a small number if you think of all of the financial institutions that are operating. And I think that number doesn't grow very quickly. And the reason is that, as I mentioned earlier, getting the MiCA is, one, quite hard, and two, then to maintain is very burdensome and creates great operational pressure on the firm, especially a firm that's trying to be lean. So I think that our biggest strength is our MiCA regulation, and I feel that there are certain products that will lend themselves very nicely to a regulated offering. So we view that not as a burden, but as a strength. So I think there's that. I've talked about our track record. So since 2023, when our new sort of program emerged post the FTX days, we've run this in a fully institutional way, whereby we've had no credit losses, full attestation, working with full KYC, blue chip partners, and I think so. I think our track record matters a lot. So those are our two big differentiators. So I think that then when we come to launch new products, or as we accelerate the growth of our existing ones, people really value that, and that's how I look to differentiate ourselves. And the next thing I think you alluded to in a previous question is that people haven't heard of Tesseract enough, and I think it's because there was a deep humility in the previous management team and the founders, and I think that still persists now. But I think you have to strike a balance between being commercial enough so that people have heard of you, but also recognizing that in crypto things change day to day, and it never pays, as we've seen with multiple failures in the past, to ever think that you've got things solved or that things are going fantastically well, and it never pays to be a braggart, frankly. And so for us, you'll see us trying to, as humbly as we can, still grow our brand awareness.
Yeah. And to that point, I feel because the market moves so fast in crypto, sometimes it's about who innovate first and put a bet on that innovation and have the real conviction with the leadership team really matters. I wondered, from your point of view as a CEO, how much time do you think about what's next for you guys? Because in a way, Tesseract has been this very established brand where they provide one or two things, and they've done really well. But then the market always changes.
Yes.
Next month we don't know. How much effort do you have to put into that? But also, what's the challenge for you to, as a CEO, to convince to a board or the founder, whatnot, right? Big question.
Yeah, thanks, Sam. Look, I think that the rate of change in crypto, we've always joked about it, is relentless. That whole joke about a year in crypto is equal to 7 in normal years. So there's that. Now I would say with the advent of AI and the ability to quickly iterate through new products and services, that rate of innovation has gone even higher. We've been guilty, I think, in the past of not innovating quickly enough. And I think the key thing is that you have to listen to what your clients are asking. And then if you listen carefully enough, they will tell you what they want. And I think that responding to clients' requests is very important. It's also good to understand where the direction of the market is going. So sometimes clients asking you today what they want, but actually you can see a little bit further out what they really want, even though they're not articulating it yet. So institutions coming into crypto at the moment, they'll tell you that they want to offer services that allow their clients to hold crypto assets. What the real thing is that they are actually going to use those as a primitive and then land all assets on those rails. And so that's the trend that we're playing for, even though the banks and institutions aren't thinking in those terms yet. That's clear where they're going to end up going, right? So how do we cut them off at the pass and say, okay, we know where you're going to go in 2 years' time, so why don't we build what you've got already? And I think that we want Tesseract to be synonymous with innovation, but doing it in a very compliant, secure way.
Yeah, makes sense. And let's talk a bit more about the leadership side.
Yeah.
Because I think maybe this is my opinion, but maybe I'm wrong. But I feel like being a leader in maybe more of a TradFi firm is totally different from in a crypto firm, especially given that there's so much volatility going on in the market. How do you think do you feel there is a big difference between when you worked at maybe TradFi and coming into crypto? Do you feel there is a different way of leading a company in the crypto space?
So I think that as I mentioned, the rate of innovation in crypto is much higher. That being said, though, I can't tell whether it's just the fact that I was slower when I was at TradFi, or whether things were slower because it was TradFi, right? I feel like I've picked up pace throughout the years and intensity, and I don't know whether low intensity is a hallmark of TradFi firms. I haven't worked in one since 2016 now, so I couldn't tell you what the pace is there. We have worked with big institutions. They feel slower, but if you speak to anyone that works at those big institutions, they'll tell you how busy they are and how rammed they are and how everything has to be delivered yesterday, which is exactly how I feel. So I think my hunch is that, you know, we're under great pressure on the crypto side, but I think it's an affordance problem. So I think, you know, we're never going to be as well funded and capitalized as some of the established TradFi firms who've got multiple diversified revenue streams that they can afford to basically hold for longer. Whereas with us, we have one or two revenue streams that define where we are this quarter, next quarter, and by the end of the year, right? Like if that's not working, then, you know, burn starts becoming a question like, what's the runway? And you very quickly start talking about extinction events, right? Whereas I think that, you know, I don't want to pick on any banks, but, you know, whether Citi's new move into crypto custody, whether it takes them 5 years or 2 years or 10, it doesn't matter, right? They will get it right. They will be there. Why? Because Citi needs to be a custodian in the space. It's clear, right? And so I think that you those firms have earned the right to have a longer runway. Whereas firms like ours, we have to get it right, and we have to be in the eye of the storm all the time. And that's different. That's a different set of pressure.
Yeah. That's interesting, because I wrote in my weekly newsletter about in crypto, leadership don't have years or months. Sometimes you have weeks or days or and so maybe right. Sometimes, yeah. And so how would you from a psychology point of view, like how would you go about managing that while also making sure that you're making the right decision?
I think I've talked about pressure, so let's start there. Yeah. So the first thing I realized in crypto and in life, I suppose in general, is that things aren't always black and white, and there are fewer no-brainers than you'd want. And I think that if something isn't a no-brainer, then you have to start thinking in terms of probability. And it's my time as a trader that really helped think that way. And so I now have to think about probabilistic outcomes. Like, if we go down this route, what's the percentage chance of success? Let's say 70%. But what's the potential downside if I get it wrong, right? What are the costs? And I need to then sort of balance off like what the potential downside is versus the potential upside. So that's one thing. So thinking probabilistically is one thing that I try and do under pressure. The second thing is that the problem I just mentioned about banks having years to get it right and us having days, weeks, months to get it right is actually a question about opportunity cost. Insofar as when you've got finite resources, you've got 20 people, there is only really one thing or two things that you can work on. You can't work on everything, right? And AI helps a little bit, but really you need to have focus. So therefore, if you're focused on one direction, you can't be doing something else. That's opportunity cost. And so managing that is really, really important. And so if you put those two sort of mental frameworks together, one thing and another thing that I've learned from trading is that you need to have strong opinions, but you need to hold them quite loosely. So I have an extremely strong opinion about the next direction for Tesseract, and it might involve vaults. Right. However, like if the data and information materially changes at some point, I have to be good enough to say to myself, has this changed my entire thesis on this thing? And if it has, stop. And that's hard. I think that you see firms holding on too long, too much, hoping that things will go better. And I don't think hope's a good strategy. So I think there's that. So then, of course, the other thing that you have to be aware of is that you need to have good data and information, and you need to prioritize getting that good data information. Another lesson learned the hard way by myself is that I needed to get better at verifying information. Used to be I could say to someone, hey, can you get me this information? And I'd look at it and go, okay, that person who's a qualified expert has got me the information, must be right. And that's a wrong assumption. I think you have to challenge the data that you get to make sure that you got the right data. And then the final thing and maybe this is sort of instrumental to the very first question you asked about, people getting on with you, is like, under pressure, I default to my values. And ultimately that might mean that I'm not going to be the most aggressive person in the world, but I'll always be able to live with myself. And I'll always be able to look at Tesseract and the way that we do things and do things the right way. And the day I can't default to my values is the day I can no longer continue in anything, and it's the time to move on.
Yeah, no, that's really close to me as well. Like, values is what makes us, right? So having that, that's really good. What sort of values do you have? Whilst we are on this, what sort of values?
I've mentioned a few of them,
right.
But I always try to do the right thing, and it sounds obvious, but people in crypto haven't always done the right thing, knowingly not doing the right thing. And I think it's because firms are under intense pressure, again, very, under short-term timeframes and single game. If you follow game theory and if you play single games, then, the temptation can be to cut a corner. And in my experience, like, I've run regulated businesses, I've either worked or run regulated businesses in my entire career. Those corners can't be cut. And that does mean that you occasionally have frictions with stakeholders who want to go faster. But ultimately, the alternatives just aren't a real alternative. If you get that wrong, and look, another thing that I find is that in downturns, I find that business complexity scales faster than revenue. And so what I mean by that is that, in a firm like ours, we've got all of the regulatory processes we need to upkeep. We've got multiple entities that we're running, right? The way that our lending business works is like it's spread over different entities. We need to manage those correctly. And managing those things well involves good people and giving them the right time and space to be able to do their job. But the temptation is, when revenues go down, to try and cut to a level which because you're trying to safeguard your existence. That is where I think in downturns things go wrong, because people are forced to reduce the affordance they have, and the cover that they have with people. They're forced into short-term decision making, and things break. And when things break in financial markets, it's not pretty, as we've seen.
Yeah, that makes sense. And when we last time met in Singapore, we talked a bit more about your entrepreneurial journey, right?
Yeah.
And I think I learned a few things from that. But keen to understand, like, the whole journey you had. You sold the company, etc. What was the time? What was the experience that helped you to be a better leader today, or a better human being, or whatnot?
I've embraced my mistakes a lot, and I've made a lot of mistakes. So I think that, I could go through, and we could probably fill a whole podcast of mistakes I've made. In terms of, founding a business in 2017, for some right reasons and some wrong reasons. I wasn't super happy about the way that the acquisition of that firm worked, and I learned a lot of lessons there. I learned a lot of great lessons at CC Data. I've been very lucky to work with tough but very pragmatic founders, and who've constantly focused me on what's important. I think that in the past I've been a little bit more chaotic, and certainly the founder at CC Data helped me a lot. Also, my current founder, he's extraordinary at making me remain focused and filter through what's important. And I think that I am just a function of the leaders that I've worked with, the lessons that I've learnt, and clearly I enjoy the game, so to speak, but I've learnt the hard way, and I think that's how you grow. And I'm also a strong believer of being firmly outside your comfort zone. Yeah. I think that growth doesn't happen in the comfort zone. The easiest thing in the world is to say, this is kind of okay. I think that you have to be out there going like, no, this is not okay. We've got to do these hard things. And of course, if you're out of your comfort zone doing hard things, guess what? You're going to make mistakes, but that's your feedback loop, right? If you're not getting any feedback because you're not pushing yourself, there is no direction. So I feel strongly about that. And I think that one of the great things has been building a team at Tesseract that believes the same thing and is learning to believe the same thing, and seeing the team members beginning to pick up and do the activities that before I was having to say, hey guys, like you do this, and you do that. Now they're doing it off their own bat because they understand the value of that process, the feedback loop. Like, it's very much like a missile, right? The missile hits the target because it's constantly course correcting. And that's what we have to do, both as as leaders, as companies, but as individuals, as individual contributors as well. I mean, you know that from your business.
Right. And so, like, you have so many different things to look at: products, sales, looking at talking to customers, culture, hiring, etc., etc. Is there a way that you manage your like day or diary or something like that, or is there a set priority? How does it work?
This is another thing I work on daily. Like,
Sure.
how do I maximize my efficiency? There are a lot of important tasks and things to do. How do you prioritize? And I think that you do have to surface all of the things that you have to do. Ignoring stuff isn't an option. So you have to put it all there and say, okay, these are the things that I have to do. You have to delegate as much as possible, i.e., can someone else do this job as well as me or better? Has to go to someone else, right?
Yeah.
Okay, is this job, this one that I'm looking at here, am I the absolute only person that can do it? If so, and is it urgent enough for me to do, then I have to do that. So, having a productivity framework is important, but then I think it's really important to have the people around you that also think in those terms, because then it becomes easier to do that delegation. And
it must be difficult to get those people on the same page as you, right?
You've got to get yourself on the same page first. But so I think that's important. I think that's important, and that's a constant struggle. Like, the easiest thing in the world is one day to say, I'll just take it easy today. That doesn't work,
right.
Because before you know it, the day's gone, and everything's compounded, and so there is no taking it easy, because ultimately you're just cheating your future self. So getting people on that journey is just basically showing them the outcomes. It's like, this is the difference between you doing it maybe in a certain way and embracing a pro-growth way of doing things, and I think that they begin to buy in, or they don't, and they self-select or get selected out. And I think the productivity side is hard. Another thing that one has to do is that I'm not sure if you're familiar with the concept of context switching,
No.
which is the brain. You're married. I'm married. Not that matters, but my wife tells me I can't multitask, right? and that's absolutely true. I can't multitask, and nor do I want to, because I think it's a myth. And the reason I think it's a myth is that the brain is trained to focus on a certain task. If that task is important, it pays attention to it. But your brain has to sort of preload information to go into that task. And then once it's done that task, it sort of needs to recover a little bit from having done that task, right? You might need a little walk or just clear your mind. And the danger is, where you've got lots of things to do, is to basically try and serial process multiple tasks that have different contexts, because your brain doesn't get the time to load and it doesn't get the time to recover. Result: extreme fatigue very quickly and stress. And so the way I try and do it is I try to create pockets of time where I'm looking at one specific thing. So whether it's sales, okay, I'm going to spend the next 2 hours thinking about sales, and I'm going to do all the sales related tasks. And then it might be about product. I'm going to try and do the product related tasks. Now, it's easier for me to do that because I can say to someone, hey, I'm not ready for that conversation now. Move the meeting, make it tomorrow, right? Harder for someone that can't just tell the other side to change the meeting. So there is that balance to make, but that's how I do it. So it's time bounding stuff, it's context bounding stuff, and then trying to delegate as much as possible to people where I'm not the right person to be doing that job anyway, where possible. And sometimes not possible. Sometimes I get up and do it. Like I say, I'll make the tea if I have to.
Yeah, right. Yeah. And then let's talk about the future for Tesseract. What do you see? What's your vision for the company?
Yeah.
That kind of stuff.
So the future, we've alluded to it. So I think that from a regulatory perspective, all of our activities will fall under some regulation, I think. So currently our lending business is an unregulated business, because lending is unregulated in this country. So we're speaking in the UK, and in most jurisdictions. I think that will fall under regulatory purview at some point. There's certainly rumbling here in the UK of that happening. But even if it doesn't, I think that one can still use regulated processes to conduct this business. You can still have best practices that you use. So I always talked about, before regulation in crypto was really a thing back in 2017, was let's act regulated, even if there isn't a regulatory framework to follow. Like, they're still assets at the end of the day, right? There are very clear regulatory rules for assets. Do you see what I mean? And so I think that the regulatory purview will increase. So making sure that we're able to be compliant and offer compliant products is important for us. And you'll see us offer compliant versions of products we've talked about. I think. Then I think that the big trend that we're playing, of course, is ultimately, I believe that all assets will be tokenized. All financial assets will be tokenized. We're seeing that a lot. I think that 2026 is the year that accelerates. We've been talking about it for the longest time, but it's actually happening now. Like if you look at tokenized TradFi assets, they're mushrooming, right? Led by stablecoins, of course, but loads of bonds. It's happening, and so if you then put that together along with this on-chain non-custodial asset management solution, which evolves, which is obviously non-custodial part is key here because you can spin it up from your own wallet. I think that's when you get to see the glimpse of what the future looks like. All assets are tokenized. All assets will be managed on-chain from safe custodial spots. So that's clearly the world that Tesseract has to play for. So we've been investing a lot of time into that, and then I think we'll just be relentlessly focused on that until the information changes, as I've mentioned, and then we assess. But for this year, I think that will be the case, and I think you'll see us to become in Europe at least a very meaningful player on the on-chain side.
Yeah. And what do you think is there an opportunity in the US or because that's probably the biggest market for most people, right?
Yeah. So what's been happening in the US has been really quite exciting and interesting to watch. They went from sort of regulatory lawfare, if you want to call it that, to almost like all bets are on type of thing. And credit to the administration to supporting the crypto business. We're regulated here in Europe, so we have to think very carefully about how we offer services into the US, whether we do that directly or via partners. I think that there are ways that we can approach that. I think the very first thing that we must do is prove that we have a very clear utility in our home backyard, which is Europe.
Yeah.
And then I think that if we do things in a regulatory correct way, being able to export those processes to other regulated markets going to be fairly simple. That's my approach. So prove the products, grow the AUM to the levels at which we can rival some of these big US firms, and then we can be building relationships with them as we go. I think that's the right way. And then as everything we do, we make sure that we're assessing the risks, and then we figure out each step, and then we take it. That's how I'm looking at global expansion.
Yeah. What do you see the things that founders other operators in the space should be looking forward to? Obviously, you have RWA, you have stablecoin.
Yeah.
Just keen to understand from your point of view, you think it's the same thing or?
Yeah. Okay. So I mean, founders in the space. I think the first thing I would say to founders in the space is if you think you're not required to be regulated, double check, because if you think you're outside of the regulatory purview, maybe you are. I think that's... Is
that similar to the grandfathering thing you're talking about in LinkedIn?
Yeah, a little bit. So just on grandfathering, how that works. So MiCA's been rolled out over the last 6 months, and there is a grandfathering period, which basically means like a transition period, whereby firms that are transitioning from the previous regime, which is the VASP regime, or the even unregulated regime, have time to get into compliance into the CASP regime, which is the MiCA regime. And that grandfathering period isn't a uniform period. So in Finland, for instance, the period's already over. It was, so grandfathering ended as the beginning of this year. But in other European states, it's up until July. But in July is really when the last ones are done, at which point you get to see the real regulatory picture. And so I would encourage founders to be very, very sure about their regulatory surface and make sure that they're in compliance, because I think that what regulators will do is that I don't think it'll be all-out war to begin with, but they will very, very clearly say this is not a service you can offer in this geography, and so some of the services that clients are currently using will then find that they're being geo-blocked, and whether they then find ways to still use it, I don't know, but basically these services will not be available in the same way. So I think that's one thing they have to be aware of. I think that they should think about their actual service and what they're trying to achieve. So founders should always go back down to the product and say, is this product something that the market wants, and be religiously checking that at all times. I think that's something that we at Tesseract slow sometimes to come to become aware of, like, is the market changing and do we need to offer new products? So I think in the downturn, we've talked about it before, is like profitability can go pretty quickly, and then you're talking about burns and runways and managing that very, very carefully. And I find that it's very difficult to do, but managing your costs very proactively is a necessity here. Like, you have to get it down to right size levels without breaking the affordance that I talked about. And then achieving business continuity, because I think that that's the biggest risk here. I think that what you'll see in the market is a lot of consolidation, where firms that have overexposed themselves have to be acqui-hired, or you'll see acquisitions happening probably for the wrong price. Great time to be asset rich and a buyer, I think, in this market to buy proven companies. And I think that as a founder, you should be thinking quite quickly, like, okay, what are my contingency plans? And how do I make sure that I'm here tomorrow without breaking things? So that's I think a trend. I think that other trends in the market that I find interesting is the DAT, digital asset treasury trend. I think that those firms they're under real pressure as it stands. I think MicroStrategy or Strategies is now known not as much because it's got a fairly strong moat, and I think that they kind of know what they're doing, and they've been doing it for a while, and their cost base is lower. But some of the newer DATs are going to have to think very carefully about their business models, especially as ETFs begin to grab some of the functions that DATs could potentially do. Like, you've got ETFs with staking attached to them already, which are fantastic products. I own some of them personally. But I think a DAT will need to be able to outperform an ETF, and many of the DATs that have been created won't survive. So I think that's something that's definitely true in the market. I think you're going to see the ongoing volatification of the world, for sure. We've talked about that at length, but those are the big trends, I think, for founders to and other people in this space to be thinking about. Yeah,
brilliant. Well, unfortunately, we are almost run out of time. But is there anything else that you wanted to input?
No, I've really enjoyed our conversation. As you've seen, we're making a very big push to try and get our name out there again. And the way we've chosen to do that is via the education route. So sorry, I'm not American. Talking about what vaults are, talking about the risks in crypto, or even just talking about what's happening in the market. I think that's very important. We're part of the conversation. We've been around a long time, and welcome more and more conversations like these, but also with people that might want to work with us and that kind of thing. So do follow us on LinkedIn, and that kind of stuff. And it's been an absolute pleasure, Sam, and it's great to work with you as well.
Yeah, no, thank you so much. And one thing I want to add on to here is that I think you guys are doing something right, because when I initially talked about not many people knowing Tesseract, but now when I have conversations, some people know. So I think these things really help, especially from an educational point of view. Maybe reaching out to more customers or whatnot, right?
Look, it all helps. I think one thing to bear in mind, and I was listening to a really interesting podcast on this a few months ago now, but it stuck with me, is that the way you build a relationship with someone is that it takes, I think, from memory, something like 7 touches. So me just meeting you in the street and having a good conversation, that's 1 touch.
Right.
But then you might then go, okay, hold on a minute. This James Harris at Tesseract seems quite interesting. Go on Google, right? Like, what can you find? If there's nothing there, it's like, okay, right. So he talked a big game, but there's nothing there. So then it's like, what other materials does a person have? Like, are they in podcasts? Like, have they written any articles? And the more that you can find of those things, it counts as another touch. And they usually say that by about the 7th touch, you're kind of bought in from a relationship perspective. And I think about that a lot. And so I think that it's not just me out there, and it's not just Tesseract, but I'm encouraging a lot of my thought leaders at the firm to do this as well. So our head of asset management speaks quite a lot and provides market commentary, and I love that. And then our head of commercial is exactly the same. Like, he's putting out stuff as well. He thinks deeply about the markets. And what that does then is that it creates a strong bench of leadership who are able to have conversations like these, but it also shows the passion of the company. That we've got people that really care about this stuff. We're passionate about the space. We want to improve the space. We want to make it a space that is safe for people to invest in and to achieve their financial objectives with. And so I think that I really like that approach and how that part's going.
Yeah. Fantastic. Love your vision, and wish you all the best for 2026. And let's go grab some lunch.
That sounds good. And look, Sam, thank you so much for having me on. I've really enjoyed it today.
Fantastic. Thanks, James.
Thanks.